view, basically where I sit down and look through a couple of charts and just see where we're going for next week to set up my trading positions for next week. So I'm not a financial advisor, so don't take this as gospel or financial services. This is really just my own opinion as what I see on the market, and pretty much here to show you how I do things, and hopefully you learn a few things from this. So anyway, we're going to get through quite a few charts today. So we're going to start off with the US markets, into a few currency pairs focused on the dollar, yen, and Aussie dollar. And then we'll finish off with a view of gold. And there's also two interesting charts further down as well. So going to be here for quite a while. So make sure you got a cup of coffee, and let's get straight into it. So the first thing we want to look at is the S&P 500. So see, massive move down, massive move up. This recovery has been phenomenal, and I think just want to highlight something here. And there's a lot of noise in the market. You just trawl through YouTube, you listen to the news. Nothing adds up. Nothing really adds up. But the minute you start getting yourself drawn into the noise out there is when you start losing money. Okay, so as a retail trader, all you're interested in is buying when you're in an uptrend and selling when you're in a downtrend. That's all you want to do. You want to simplify your life, and you want to make sure that is the plan of action you have. Don't listen to the noise, because the noise is going to get you burned. If I look at all the chart comparisons to this fall, to the 1920s, to the dot-com bomb, to financial crisis of 2007, and what there's going to be a second leg down and all this nonsense. Yes, there may be. They may very well be, but you might as well just toss a coin right now. Okay, so for now, this is an upward trend. Trade with the upward trend. Yeah, it's as simple as that. Okay, and the other thing around markets are not designed to go down. They're designed to go up. They're designed to make long-term investors rich. Okay, stock investors rich. They're not designed for anything else. So, and that's specifically around the indexes. Okay, not so much currencies. Currencies can move in either, are designed to move in either direction. But indexes, those are stocks. I mean, CEOs are hired and fired based on the profitability of the stock, not on the loss of the stock. Okay. Anyway, enough of a rant. So the trend is up at the moment, and I think the important factor to realize here is it was a bit messy here at the 61.8 retracement of this big move. We've eventually broke through, and we've now hit the next major level, which was 3,200, which is right here, not there, right there. Sort of we broke through this level of resistance, and then we broke through this area of resistance here. Okay. We haven't closed on it on the daily, but we did get above it and come back, and we're sort of testing the underside of that area. So if I come to the 8 hour, well, you won't see it on the 8 hour, but you'll definitely see it here on the hour. You can see we broke through, came back, and this is just profit taking. So the point is, this is data. This was non-farm payrolls. So we went from 22 million jobs lost the previous month to 2.4, I think, million jobs created in this last month. So there is nothing to worry about. Okay, so at this stage right now, trend is up, and I just want to stick to the higher time frames on this one. Trend is up. I'm looking for pullbacks. I've been looking for pullbacks for 2 days now. I haven't got them, but anyway, they will happen eventually. So I'm looking for pullbacks. This is the first logical one here, which is 31.58, but I'd also settle for that, which would be 31.51, and I'd also settle for a Fibonacci pullback to the 50% of the last move, which is right on there. So that's fairly fine. Okay, so that's kind of what we're looking at. If I just quickly get on to 15 minutes just to show you a couple of things that you had on offer here, and that was actually on the 5 minute. Sorry, let's give it this. So you never want to be in on data release. So here was your data release here. Okay, you can see we had this massive spike up in the data release. This is 5, 10 minutes, 15 minutes. Okay, then you had a little bit of a pullback, and then you had this buying area here. So it gave you enough time to see how price reacted to data. You had 10 minutes to see, okay, it's moving up. Then have a look at what the data number was. You would have seen massive amount of jobs created, so that's going to be positive. So you're looking for your long. Long is right above this 5-minute bar with a really tight stop here, and you would have either gone into this area for profit, or you would have looked for the next area of resistance, which was 3,200. Let's get that here. Oops. Oh, that broke through quite hard. There it is there. Okay. So that's pretty much, the way that you would have traded the noise. Stay out of this. You didn't want to be in this. Positive noise came back, and then you could have traded it. Okay, but you've got to be wary, because sometimes this thing pops all the way back down here, tests, and then sometimes breaks down, or alternatively then climbs again from the bottom here. So that was the one area. The other area was a break of this fractal here. There's your entry right over there. Your stop is below here, and that would have just been a one-to-one trade. Okay, so just wanted to highlight that. That's just something bear in mind when you do have positive data like we saw. But yeah, so what we're looking for is pullbacks, and I think this thing is still long and strong. No reason to be trying to short this thing. You're just going to get yourself burnt. So stay with the trend, wait for the pullbacks, onto support, buy off support, and sell off resistance. Simple as that. Okay. Nasdaq. This is a really interesting chart. We've closed the week with an all-time high. Okay. So just put this into perspective. We had a fall of 31%. Okay. We have now had a rally in 3 months, which is now 47%, 46.9% at the moment that we have rallied in the last 3 months. This trend is up. There's absolutely no reason to do anything. The Nasdaq stocks are pretty much going to be stocks that are going to benefit from the new way that the world is going to be working. A lot of online businesses, a lot of people working online, working remotely, and Nasdaq stocks are the ones that are going to be actually benefiting from it more than anything else. So that's why we're rallying like this. But as you can see on the 8 hour, trend is up. You are looking to buy and you're looking to hold. It's as simple as that. So be interesting to see what happens here at the all-time high. Let's get this level in here quickly. So that's sitting at around 9763. So I think for me, the psychological level right now is 10,000. Okay, so yeah, it's going to be interesting to see what happens. I would expect some kind of structure, pull back on structure, and then an opportunity to get long again. But when price does this kind of thing, you can see down, up, down, up, down, up, but gradually grinding up and then pushes up to get through that level. That's normally an exhaustion bar. So sometimes you do see a bit of a deep pullback and then another attempt at it. Other times you see a grinding up, pullback, and then test it, and then an acceleration further. Okay, so this thing is long and proud as well. No reason to be looking for shorts here. Okay, let's just have a look at the dollar. So we're going to use euro dollar as a proxy here, just to get a view. So we're just going to go back to 2017 here. We're on the weekly chart, and you can see we had this massive rally, pullback, and I distinctly remember this area here, where we had this head and shoulders here, where everyone was expected the euro was going to crash. It did not materialize. We basically pushed up with another leg. Then we consolidated, and at this point, the dollar started strengthening, and we started strengthening from late 2017 all the way down to late 2019. This little push up here, we had an indecision bar on the weekly, then we had 2 weeks of strength, and then all of a sudden we had the virus. And when the virus came in, we had a massive crash. Then we had up, down, up, down, up, down, confusion. Okay, confusion within consolidation at the end of a fairly long trend, and also off a significant area of support. Okay, not exact, but you can see it's kind of in this area. And we have now broken that consolidation, and we've had pretty much 3 solid green weeks. The next thing that was happened here is we have broken through. I'm going to bring this into the middle here, but we've broken through this area here of 112. Okay, so 1.12, we've broken through it, we've got a weekly close above it. As far as I'm concerned, this trend is potentially changing, and you're going to see it on the daily. Okay, so if we just tidy up the chart a little bit, I'm just going to delete everything. Okay, so here we have the 112 area. Okay, and we also have this range break, which I highlighted a couple of weeks ago, and that target has been realized. Okay, so what are we looking for? So I'm looking for pullback still, and I'm looking for opportunity to buy. This is profit taking, pretty strong week. That's profit taking for the week. I would expect some kind of consolidation or pullback, and I'm expecting this to continue. So basically, we're expecting some euro strength against the dollar or dollar weakness as well. And it depends which pair you look at, but that's pretty much what's happening on those pair. The next pair that we're looking at is the US dollar, Japanese yen, also on the weekly. And, Japanese yen is a safe haven. So, when stocks are getting hammered, people buy the yen. It's safe, but I think the risk on is back. So in other words, we're prepared to risk money in the stock market, and as a result, people are selling out of the Japanese yen. So if we look at what's happening here, we are in an upward trend. One thing I want to point out, I pointed this out a couple of weeks ago, is this inverse head and shoulders, and that target has also been realized. Okay, so there's our head and shoulders there. And if we move that up, you'll see, whoops, sorry, I lie, almost realized. Okay, but it's pretty close. Make sure I got everything right. No, I haven't got everything right, sorry. Should be off the level. There we go. There we go. So, just tad left, okay? So, for me, the next logical step would be some kind of a consolidation or some kind of a pullback onto level. And here you can see some congestion here on the 8 hours. So that would make a logical area to see how we bounced up, broke through. I wouldn't mind seeing a retest of this before getting long again. So that's 109.058. Okay, that's definitely something we're going to be watching. The next pair next currency I want to actually get through is the Aussie dollar. Guys, if you're still listening, I really appreciate a like. Just hit that like button. It does help me grow the channel, and I'm desperately trying to grow the channel, reach as many people as possible, and hopefully, spread the love. Anyway, pound Aussie dollar. So you can see how the pound has been strengthening pretty strongly. We're in this major area of resistance at the moment. If we come down to the daily, you will see a little bit of indecision here at this level. If I look to the left, you'll see the reason why. We have an area of support, resistance, 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 support, support. Okay, and now we're in support again. So this is pretty much a pretty interesting area, because one of two things are going to happen. We're either going to bounce up with a pretty violent bounce, or we are going to continue consolidating here, and then continue to the downside. The trend is to the downside. And obviously what we're looking for is pullbacks onto structure. Now, we did get one pullback, but it didn't quite happen. That was on Wednesday. And there's another area that I'd be interested in as well, is up there. So I'd be interested to short this off 184.883, or alternatively 183.421. If we do break below these lows here, I want to see a retest of those lows, and let's move that there. So I'd want to see a break below 180.554, move to the downside, come back and come and test this area. That would give me another short. So I do expect the pound to weaken further against the Aussie dollar, and Aussie dollar just to continue strengthening. If we look at the Aussie dollar USD on the monthly, you can see the Aussie dollar is strengthening against the US dollar as well. We are also in an area of support, resistance, sorry. If you look to the left on the screen line here, you can see there's a lot of resistance here. Okay, if we come down to the 8 hour, And I haven't refreshed my 8-hour data here. Let's just see if the daily's up. Nope. Okay, so let's just wait for that. Okay, there we go. Right. I just want to zoom in a little bit. Okay, so if you look at what's transpiring here, you can see there is an area of support. Okay, so that is 0.69362. And you can see we flirted with it. Let's get back here. You can see we flirted with it, we've broken above it, we come back to support it. So this would be an area that would interest me. If this area holds, and we'll go down to the hour for that. So if this area holds and we start moving up, that's definitely a long opportunity. So you can see continual higher lows here. Okay, this area here is just profit taking into the week, not reading too much into that, looking a bit further beyond that. Okay, so any pullback onto structure, and there's a lot of structure here, guys. So I just need to look for my inside fractals here and put a level on it. Those are my levels. Okay, so I do expect this to continue. So the Aussie dollar is extremely strong at the moment, and I do believe it's going to continue. So that's definitely something that I'm looking at on the Aussie dollar. So trade the Aussie strength as such. Euro Japanese yen. Okay, so this is another one where you can see people selling out of the yen. Okay, look at the weekly, 3 weeks in a row been selling, and the critical thing here for me is the breakthrough of this area here. So that's 123012. Okay, so come down to the 8-hour here, and you'll see it's a breakout of that level. I would be interested to see a pullback onto that area for a long, or alternatively a pullback back into 122558. And if that gives way, then I'm definitely long at 121142. Okay, so this is another one where this trend is extremely strong. Risk on is in force, so Japanese yen is going to get sold. Okay, then just one from my home country, which is the USD ZAR, South African Rand. And I just need to, we have a very volatile currency. Any little tweet from Trump or any little slightest negative noise in the market hammers our currency. Very volatile environment to be in. But the point we're getting at, we had this massive break. Okay, as a result of the virus, we had this massive break through 1550. Okay, you can see how 1550 was held for so long. And then we had this massive breakthrough. We broke through previous all-time highs, which was 1786. That was the previous year. And got up, found support there, and then broke through. So, but playing on the dollar weakness at the moment, this is more than likely going to continue falling. So we've had a couple of levels that have given way. And I don't know why the chart does this to me. But anyway, we're getting through it. So you can see we had a few levels that gave way. And the first one of interest for me was this level here. You can see this massive rally, and then they sold off here, and buyers came back in at the bottom. And that was 16,950. Okay, we flirted with it a bit. We came down to hit the next level, which is pretty much that area there, which was 1672. This trend is down, so what we are looking for is opportunities to sell. And the trouble is, I'm going to be looking for level breaks and then retest of levels for that to continue. There is a gap to the downside, and I think, with the way things are looking, 1550 is definitely on the cards at the moment for this pair. And for as long as the dollar weakness continues, that's exactly what's going to happen. The next one is the two safe havens, the Swiss franc and the Japanese yen. So you can see on this one, the Swiss franc is also getting a bit of a hiding. Basically, people unbundling out of that. Now, the interesting thing for this chart, for me anyway, is that we are tagging this previous triple top here of 114314. So I say triple top, but it could also be range. Okay, and it's a range that we've been flirting with for quite some time. So a break above this and a retest of this area is definitely going to get me long again. And we're just going to have to get the 8-hour data up and running. And there is my 8-hour level right there, which we are flirting with at the moment. There is another one further down, around there. I'll give you those levels now. I just want to draw them all in quickly. And there is another one right over here. Okay, so the first one is where we are now, which is 113910. The next one that we're looking at is this area here of 113148. And then we have this area to the downside of 112452. So trend is up. I'm looking for pullbacks on structure, and then we're looking for us to buy off support. Okay, so I think those are pretty much the currency pairs. And the last one that I want to touch on is gold. So, you know, there was a lot of, let's just not say noise, but there was a lot of expectation that gold was going to hit 1800, which is right over there. Okay, now you can see we tried, and now we've had sort of a weekly engulfing bar. So I think gold is losing its luster just a little bit. It's still very much in an uptrend. No two ways about that. But I think the smart money at the moment is going to be waiting for this to happen. So I think you're going to find a bit of a pullback. We're going to probably have another green week next week across the board. And as a result, gold is just going to sort of mosey on to the downside. Now, when I say mosey on to the downside, I definitely don't imply that it's going to fall down to the floor. I don't see that happening sometime soon anyway. But I do believe it's going to come and find some support somewhere. And we just need to wait for that support level before getting the opportunities to buy into gold again. So it's been volatile the last couple of months. And it's not one that I want to trade at the moment, but it's definitely something we need to pay attention to. So you can see there are trend lines that are breaking as well, which we need to pay attention to. But if you look at the weekly, what we're looking for is some kind of a pullback. So logical pullback would be something like a 61.8 Fibonacci. You can see it lines up with this previous breakout here at 1569. That would be an area that would probably interest me. But for now, it's a very similar sort of scenario to what I see happening on Bitcoin at the moment. Probably going to go sideways, and then you will have opportunities to buy at a later stage. Anyway, that's it for my week. So as you can see, definitely going to be looking at the S&P, possibly the Nasdaq as well. The dollar weakness, so any dollar pair, I'm looking for weakness in those dollar pairs, looking for Aussie dollar strength, okay, and I'm looking for Japanese yen weakness. So those are the areas that I'm looking at. So obviously across all the different currency pairs, that will be the chain of thought. And then obviously what we're looking for is structure on the charts. So we want to buy off support and we want to sell off resistance. And that's pretty much the plan for next week. Hope it helps. And again, if you like what you hear, please give us a like, drop us a comment. I really appreciate it. I need to grow the channel. And we'll catch up with you on Monday. Stay safe and cheers for now.